Hello again, everybody. It's Harry Box with the Technical Trader at thetechtrader.com. And it's Thursday, the 20th of December. These are the charts of the day. Well, to say the least, a nasty as they come day today. And we're not surprised based on what we're seeing. Let's take a look at the indices real quickly. You can see that the watershed or waterfall decline on the S&P just since December the 3rd, when it was 2,800, has taken us down to 2441. That's 360 points roughly. Or about 15% straight down. And from the top of about 2937 to today's low at 2441, literally 500 points. And that is on the borderline of about, let's call it 17-18% straight down. Well, with three waves anyway, 1, 2, 3. But when you look at the overall structure of where I thought key support would be, we nearly tagged that today, and it actually went through the bottom of the channel in terms of the parallel channel. Are we oversold? Absolutely. Let's take a look at some numbers, but before we get to that, I want to show you the rest of the indices. No difference on the NASDAQ 100, perhaps not even as bad as the S&P when you look at it that way. But we did get near the bottom of the channel. I gave you a number last week where I said around 60, 85, 6100. Today's low, 61.61. We got pretty close. Now, whether we rally from this level or spill over tomorrow morning and then rally them back, we'll see. Tomorrow is Friday, before a weekend. Going to the Christmas holiday, it's going to be very interesting going forward. Worse than even that would be the transportation stocks, in my opinion. Look at this decline. From 11,000 to 9,000, 2,000 points, and I mean straight down 20%, literally within 2-3 weeks. That's about one of the worst declines in history on any exchange that I've ever seen. If you take a look at the overall structure of it, it's getting close to a 0.375 decline of the entire run from the 2016 low. So bottom line is there's support in the zone right here. I'd have to say 8,700 roughly, and we're only a couple points, 300 points from that. But the downside volume has been intense, much like it was here, which resulted in a big snapback. And the IWM, which charts the NASDAQ, the Russell, has also plummeted, and I mean dramatically, taking this from a high of 173 in August down to today's low of 131. Now that doesn't sound as bad, but it is, 40 points or about 25% straight down, again, with the three-wave corrective. There's a line of support in that zone, then there's a long-term, going way back, rising bottoms line that goes back 8 years. That's around the 127 level. I don't know if we test that, but if we do get a further spike down into that 127.8 range, and we can do that tomorrow easily, then we are going to probably be at an important, at least snapback tradable low, in my opinion. Why do I say that? The McClellan oscillator, in addition to all the indices, is tanking. What I mean by tanking, obviously a huge drop from plus 125.28 range down to minus today's low of 211, closing at 193. So if you look back historically where that's been in the last 2 or 3 years, you can see this is the second worst reading since February. Which was in a very, very negative pullback as well. But we're not as steep as that, and this looks worse price-wise. Let's just say that we're oversold, and we may get a little bit more oversold before it's over. What tells me we've also kind of gotten to the throw the baby out with the bathwater mentality. If you take a look at the percentage of stocks above their 40, it's a phenomenal 6% at the low today. I haven't seen that since 2016, when it got down to 3%, 3.5%. So this is historically in a range of oversold per se on many of these indicators. That tells me that and the prices themselves in terms of the indices, it tells me we're in extreme oversold condition, ripe for a snapback and perhaps a Santa Claus rally. Enough of that. Let's go into some of the ETFs and stocks today. And alphabetically, DWT, because oil is getting whacked, and I mean whacked, down another 3-4% today. And we're down in the $46 range from 70 some odd. Now you can see we've dropped $25 on oil, and the ETF for the DWT bear ETF is taking it from 4.5 to 17. That's 300% since the October lows. Now, is it going to extend? Well, momentum is phenomenal, and today's pop-up, closing near the prior high from 2 days ago, reads resistance at about 18.75, 19. That's my next target, and possibly 20 or better. But again, we're long in the tooth on this one. Same with the SCO ETF as well. But you can see that the way it looks, It may not be over. We may see some more towards the upper end of the channel on a parallel basis to about 32.3, something like that. So watch tomorrow. Tomorrow may be a climactic type day. If today wasn't, then we're awfully close. There are some stocks that moved today. Look at EHTH. It's been in a beautiful uptrend, undaunted by the market. Yes, it did come down, but today it popped 227 or 6.6%. Volume was the best in about 3 weeks. That's a breakout, my friends. My target, 46.48 area. Let's get through the high first, the recent highs, where resistance might be. Let's call it 40 3/4, and then we're looking at mid to high 40s. Gold stocks did well. KL is moving yet again, up another 3.7%. And Royal Gold, one of my favorites and brand new tech trader, swing was up 521 or almost 7% today. Where some other stocks that were moving today, MRIN exploded for the third day in a row and has now popped from a low of 220 all the way up to 880. That is a 300% pop in a week. So obviously we want to be very careful going forward, and you can see where lateral resistance is right at this level, right where it is. If we get any kind of extension through, about $11 is the potential. If we get a fall through tomorrow, keep an eye. Marijuana stocks, some of them are moving, particularly the beverage stocks. Look at NBEV. You remember that the stock imploded and then broke back out again, right? Recently gave you a new swing on it when it was 6, with targets at 8 and 950. Today we reached, after pulling back, we reached, what was it, 685. So we may be on our way for more upside, and my targets still remain 8 and 9.5. PTE polarity, well, I mean, again, on a day, lousy day, up $1.56 or 10.6%. I'm not sure if this is the low yet. This could be a 1, 2, 3, 4. We may see this as wave 4 before it goes lower. But if it does get take out, and I think the keys to watch on this going forward, 17.5. We get that, and that 18 range taken out, you've broken through the declining top line. You're on your way to higher levels with targets at 20 and 23 for starters. Just a look at the ultra short VIX, with the VIX hitting 30 today. Let me show you that real quickly. There you go. The VIX popped to 30.30, closed at 28.38. But maybe breaking out of its formation, and if it does that and spikes up anywhere near that, we may see a run into the 38, 40, 45 range. At which point, if we get that and the big negative tick rating and the oscillators down about minus 240, 280, something like that, as early as tomorrow, we see that, jump in with both hands because you're going to get a rally. No matter whether that lasts or not is another story. And that's it for the longs. I'm going to take a look at some shorts for you. Some of the tech trader swings have done very well. AAXN imploded today. Didn't see that till after the close. But you can see how it got to the top of that channel. And that wedge, more of a flag, I believe, if you look at it this way. That broke hard today, down 345 or 7.7%, and appears it's probably going to head for a test of about 37, 7.5 short term. Perhaps it extends further and gets into the low 30s. AXGN, which imploded yesterday, a couple days ago, continues to fall absolutely apart. Today reaching a low of 1689 from just 2 weeks ago when it was 36. You can see this is extremely oversold and probably should be covered. CRSP broke its wedge a week ago, and it's been falling every day since. It's now in a 1, 2, 3, 4, 5 wave decline nearing its end. 23.4 zone would be a target cover zone. EDIT also imploded or rolled over from its recent rising wedge and took out support, or should I say closed right at it there today. Any further damage, we could see that in 19.5, 20 zone. Tech trader swing IIN is just looking great. Head and shoulder top breakdown, and look at that implosion. Bear flag, and down goes Frazier. 304 lower, 11.5%. I could see more downside around 21, possibly even high teens. Intuitive Surgical tanked another 12 today. This has rolled over to new lows, but it's at the bottom of this channel that I've drawn in. And there's some lateral support right in that area. We break this, we're looking at 433 and then maybe all the way down to 400 if the market gets crazy. Tech trader swing MED, after dropping down and forming a little rising wedge right there, it broke down and then snapped back for a day or two and then rolled over. Down another 481 or 3.8% today. Looks like it's headed for this gap at about 115, 114. If it should fill that gap, it can get down as low as 100 or less. TWO, tech traded swing, also falling apart. You can see how this lateral resistance rising wedge failed, and it's rolling over. I'm looking for 40.42. And lastly, Weight Watchers continues to get pummeled, having dropped already from 105 or so down to 40. It doesn't look like it can stop until it gets to 31.32. Pretty ugly charts out there. This is HB signing off. Have a good evening. TGIF tomorrow, and I'll talk to you then.